Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 26, 2022. Hope you're all doing well. In today's segment, we will take a look at high volatility option trading strategies. As many of you know, off late volatility is very high. That's when you can make a lot of money by trading high volatility options trading strategies. So with that, I got few of my favorite stocks and ETFs to trade, taking advantage of this high volatility. One of the stock is Tesla. Tesla has got very high volatility, and also ATR is very high. That tells you this stock can go up and down very nicely, mainly because volatility is high. Average 2 range or ATR is also high. And I got one of my favorite here, Snowflakes. Same story, very high volatility. Stock is moving up and down very nicely. And we got few more. We'll take a look and see how we can take advantage of these stocks and make money, whether the stock goes up or down or sideways. So with that, let's jump in and get started. All right, so you might ask, when do I buy and sell options? So the general guideline for options trading is, when the volatility is low. Look, we got volatility or implied volatility percentile less than 35. When the volatility is low and when the relative strength index or RSI is low, that's when you buy call option. So that way you can make money. You could also buy a stock itself. This is one of the very good strategy. And look for delta more than 70. That tells you, these are a little more deep in the money call option. You can make some good money by buying them instead of buying the stock outright, where you have to pay more money. So this is when you buy call option. Generally look for lower volatility and look for stock which is sold off with a lower RSI, as you can see here. And you might wonder, when do I sell put option? You sell put option when you're bullish, and you want to make sure the RSI is typically lower and IV percentile is high. Because IV percentile is high, you get nice option premium. You got to keep it if the stock goes higher. And you want to make sure the day to expiration is less than 45 or 50 at the max, and make sure delta or even probability of touch is very low. Delta is around 15 or so. So that's when you buy a call option and sell put option. And then you got bearish strategies here. When you're bearish, you will basically sell a call option or even a call spread for the matter, and make sure RSI or relative strength index is more than 60. That tells you stock is already oversold. It can come lower. And make sure IV percentile is higher. That tells you volatility is high and you can make some good money by selling call option way above the current stock price. When you're a seller of a call option or you're a seller of a put option, make sure day to expiration is about 45 to 50. Don't go too much. You don't want to have too much risk in your exposure here. Reduce the number of days to 45 to 50 max. And delta, make sure delta is less than or equal to 15. That tells you probability of the stock reaching that level is low. That's why you're selling call option way above the current stock price. And you can buy the put option. Generally, when you're buying a put option, anytime you're a option buyer, make sure IV percentile is less than 35 or so. Look, we got a call option buying. Same story here. Make sure IV percentile is lower than 35. And when you're a buyer, you want more duration at your exposure. That's why when you're a buyer of option, make sure your day to expiration is 90 or more. And also make sure delta or probability of touch is more than 40, because you're buying put option here. You want it to go higher. So that's general guideline when you buy and sell options. And when you're doing the spreads of the conditions are a little more relaxed, because you're buying one selling other, so you don't need to worry too much about volatility when you're doing the spreading strategies. So this is general guideline. Now we'll jump in here and look at high volatility options trading strategies, mainly when it comes to ETF. So when it comes to ETF, I do a lot of trading in option trading in ETFs. I love these ETFs. I kind of curated this list here. Look, we got SPY on the top here, S&P 500, and look right now, as you can see here, IV percentile is 63. That tells you slightly high here. Volatility is high. So what you could do is you could go way below the current ETF price here, way below 390, and sell some put option. If your account is smaller, you could sell some put spreads and make some money that way. And same story QQQ. You could sell some put option here also. Look, IV percentile is nice and high, 56. And I also love to do this for IWM and IYR and so on and so forth. Selling put option this way is a very good strategy, especially when the market is oversold on these great ETFs. So with that, what we'll do now is we'll go into thinkorswim platform from TD Ameritrade and look at a few of these strategies where you can sell some put option. So what we'll do is we'll go to thinkorswim platform. I got here on demand, so we are in April 1st, as you can see here. I can change the date to maybe say May 1st, just picking some date, nothing specific here. Let's say we are going to say May 2nd here and select that date here. So it's buffering here. So in the meantime, you could bring up one of the ETF here. Let's bring up SMH or even QQQ for that matter. Let's go to QQQ and let it buffer. In the meantime, let's look at the chart here. All right, so our buffering is done here. So look, QQQ as of May 2nd, it's at around $311, as you can see here. And RSI at this time here is around 35. That tells it's a low RSI, and IV percentile is very high. That's our favorite time to sell some put options and make some money. So what I will do is I will go here to the option chain here. When you're a put option seller, you want to have around 45 days to expiration. I would go here right to 46 days to expiration. So let it come through here. It's buffering here. Look, we got option chain here, and as you look through here, this ETF QQQ, $311, 52-week high, as you can see here, is 300. Let's see here, 52-week high 408. Ways to go here, and I would go somewhere around. Look, we got option chain here. I don't want to be too much greedy here. I would go somewhere right here. Look, if you see here, delta is just 5 here, and look, probability of touch is around 14%. I would probably go right here somewhere. Look here, probability of touch is 19%, and delta is around 0.7. I would sell some put option right here and collect $1.98. I would even go $2 here. Typically you get a fill for mid price here at $2. I would just go here, sell a put option here for $2 and collect $200. Look, I'm selling this here, and look, I'm collecting here $200. That's my max profit here. Right here, and as long as stock stays about 243, look, currently stock price is 312, way below the current stock price is my break-even point here. I feel pretty comfortable. I would confirm and send this here and go from there. And then we could do same thing for one of my favorite ETF here. I could do it for IWM. Again, it's one of the big it's a small cap ETF, IWM, Russell 2000. I would do same thing here also. I would go right here. I would go around say 18% probability touch, or even I could go here. Look, volume is very high at around 147 here, or even I could go right here. I would go right here 150. I would just sell this put option right here. All right, I'm collecting $1.24. I would do it for the mid price here, $1.24, and confirm and send here. All right, that got filled right away, and we'll do same thing for one more here. SMH, one of my favorite ETF, semiconductor ETF, as many of you know here. We'll do same thing for this one also here. We'd go around, say, let's go here and see here. Look, 13% probability of touch around 160. I would go a little higher. I would go right. Look, volume is a little bit low here. I would go probably right. Right here is good. Don't want to be too much greedy here. I would just go here. And look, 114 is the mid price here. I would say 114. And confirm and send here. All right, this one also got filled here. Let's see what's going on with our QQQ here. And go from there. Look, QQQ here, waiting here. Look, mark is 179. We try to sell it at $2 here. I would just change it and say 176 and let it fill here. All right. So in the meantime, what would I would also do? I would go down here. Look, these are my favorite ETFs. You could sell some put option on these way below current stock price and make some good money. I would probably avoid XLC here. It's a it's a good ETF, but look, all this Facebook and all these stocks are sold off here. Probably you're better off with other names here. All right, now let's look at high volatility stocks here. I handpicked some of these stocks here. Look, we got Google all the way to CRISPR. These are all high volatility stocks. Look at the IV percentile here. All the IV percentile is nice and high, above 50. And as you scan through here, look at the ATR. ATR, or average true range here, in last 14 days is nice and high. For most of these cases, it's very high, as you can see here. I love stocks like Google, which is a high price, as you can see here. I love Tesla. Again, look, Tesla here, one of my favorite option trading stock here. And I also love stocks like Adobe, CRM. Again, my favorite. AMD is one of my favorite here, as well as NVDA. So I selected this stock because look, many of these companies have nice net margin positive companies, with the exception of Snowflake. I know Snowflake is doing great. They're grabbing these big customers. That's why I love trading options on Snowflake also. So, and many of these companies have got nice cash. Look, you don't need to worry. They got nice cash in their balance sheet. So that's one of the reasons I look at these companies and play this options game here and make some money, especially given there is a high volatility going on here. With the look at the IV percentile, nice and high IV percentile. So with that, let's go back here to thinkorswim platform here. I would bring up my favorite stock here, Tesla. All right, Tesla, as I go into my chart here, it's buffering. Let's give it a minute. Look, Tesla right now, as of May 1st here, or May 2nd, IV percentile is super high, 75, RSI is 37, tells you Tesla is sold off big time here. And earnings is, I think it's 5.2. I'm not sure if that's correct, but let's go in here and let's see what we can do from an options trading perspective. Because IV percentile is very high here and stock price is 874 here, you could really do some put option strategies here on this one here. Look, right here, let's see here, stock is 875 and we'll do 46 days out. That's good enough here. And I would say keep looking at the option chain here. Look, there's a good amount of money. You don't need to be too greedy here. Probability of touch right here around $500 is around 12. It's around 14%. You could do right here, or if you're a little more conservative, account size is smaller here, you could just sell a put spread here. I would do, if you're doing a put spread, go a little more here and do around say 600 here. I would do 600 and say 580 here. Nice $20 put spread here, and go from there. I would be selling a put spread here, and look, go here right here, and I would do 600 and 580 to $20 spread here, and go from there. Look, we are collecting $2.02 here, which makes sense to me. High volatility. Go sell this put spread here and make some money. Look, that's done here. And you could also sometimes you worry Tesla, what might happen. It might come down, go up, whatever. So if you're not now we sold a put option here. You could also buy some put option, hedging our bet here. So we got some $2 or $200 here. Now we can go all the way up to around $800 here. Look, we got 874 his current stock price. I could go 880 here, and I could buy a $20 wide spread right here. All right, I'm buying a $20 wide spread, even though volatility is very high here. Because it's a spread, I'm not too much worried about volatility. So 880 is where I'm buying. I would sell around, say, 860 or so. $20 wide spread here. I would be paying around $9.50. Remaining $10.50 out of this $20 spread is my profit potential. I would confirm and send and go from there. So that's a Tesla, and I would do the same thing for one more high flying stock. Maybe let's look at AMD here. You could do same thing for AMD here and go from there. Look, from a chart perspective, it's buffering. Let's give it a minute here. So AMD, as of this date here, as of May 2nd, it's at $87. And look, AMD has got high IV percentile. Look, it's 92. Wow, it's going through the roof here. And low RSI 38. Take advantage of this. I would sell some put option right here, and I would say let's go here, and I would say 65. I'm pretty comfortable. Nice volume here. Probability of touch is around 31% here. No problem. I would just sell a put option right here, collect $1.40 and go from there. And you could also do similar thing. I also love NVDA, one of my favorite stock here. You could do same thing on NVDA here. Go and look at the chart quickly here. Look at the volatility. Look at the volatility in NVDA, 100 out of 100 here. I would do same thing here, make some money out of NVDA here, and go right here. Let's say, look at the volume as usual. I would go 115 here. Current stock price 188. I would sell a put option at 115 here. I'm pretty comfortable. Nice volume. Or you could even do 117.5. It's a little better volume here. Or 120 is also good. Let's do 120 here. You collect $184 here and confirm and send. All right, so we'll do one more here. I love Snowflake. Snowflake is a good one here. Look, Snowflake, it's buffering. Let's bring up our chart right here. Snowflake is also a very high volatility stock as usual. 98 is the volatility. Stock is sold off with the low RSI. I would go to my trade tab here and sell some put option here. Look, as you scan through here, this one has got 165. I'm not too comfortable because look, probability of touch is 89. I would go further down here, and look, probability of touch here is 37. I would go around 20, 27 or 32 is also good here. I would go right here to 110 or even 115 is good enough. I would collect $3.10 here and go from there. All right, so now let's see, do we have any stock which is not filled yet? Look, we got NVDA not filled yet. We did 184. It's 183. Let's change it to 183 and go from there. Oh, all right, we got NVDA also filled. We're good here. So now what we'll do is we got all our high volatility option strategies all set here. Now, from May 2nd, let's go all the way to June here and try to say take some profit off the table here. Now we are going all the way to June. Let's see here, 24 here, which is last Friday, and see how is our high volatility options doing here and take some money off the table and go from there. Looks like our expiration is June 17 in many of these cases. Let's go back to June 17 here instead of June 24. All right, let's give it a minute for it to pre-buffer, and then let's see how we did in our options trading strategies here. All right, so we are done. Let's see here. We got Tesla here. Look, in Tesla, we did well here. We made around $1,200 here. So we could just close this option spread here. Look, entire Tesla trade here. We got two types of trade. We got a put spread that we sold here. Basically it's way below the current stock price. In this put spread we made $174. I would close and take the profit here. Look, as of here, let's see how is the Tesla doing here. Look, we sold around May 2nd here, and looks like Tesla came slightly down here. Even though it came down because it did not touch our price target here, we made some good money here. I would just confirm and send and take some profit here. Let's close this position here with this vertical spread and take some money here. Look, it's trading at 28 cents. I would take some profit here, confirm and send, done. So next we got one more Tesla that we basically bought a put spread here. Look, the put spread that we bought made some very good money here. Look, Tesla came down big time here. That's why we made some good money. So I would just close this out here and take the profit and go from there. Look, we made nice money here. We are getting a $20.37 credit here. I think that's a good money that we are making. We sold this put spread. Look, we sold it at $9.43. I mean, we bought it at $9.43, and now we are closing our position nicely at around $21. I would confirm here and go from there. All right, so I would close this out here. Done. So we got a couple more here. Look, we got AMD, IWM, all this we sold put options way below the current stock price at the time. All these things we made some good money. Look at the PL open here. We made money. Maximum money that we made is in Snowflake, $285. I would just confirm and take profit in all these names here, just as easy as this here. I would create a closing order. There you go, and I would do same thing in other names also, so that way we could just nicely take profit here and go from there. This is one of my favorite strategies here. I love volatility because volatility is very high. You go after some solid companies, and you sell put option way below the current stock price. And in high volatility names like Tesla, you could also buy put options, because that way you could make money when the stock comes down also. So this is one of my favorite strategies. That's one of the reasons I love this high volatility. Instead of buying stock and holding the bag, you could do the options where you can go way below or way above and sell, call or put, and make some good money that way. Take advantage of volatility. Don't be afraid of volatility. So with that, thank you very much. Happy investing and trading. Please subscribe.